Hello everyone, I'm Marty Pospisil of Pospisil Realty Group, and welcome to my July 2021 market update. I've got a lot of stats that came in yesterday. I've been compiling them to put this presentation together for you. I hope you enjoy it. One of the first things I'd like to just review with you is the metric that I use to track the activity in the market is referred to as the sales ratio. And all the sales ratio is the absorption rate of inventory in sales in a given month. So if the sales ratio or the absorption rate is greater than 21%, we are in what we call a seller's market. There's upward pressure on pricing. If the sales ratio is between 12 and 20%, we're in that balanced area of the market. It does not favor buyers or sellers. However, if that sales ratio drops below 11%, there's downward pressure on pricing and we're in what we call a buyer's market. So that's what I use to determine what kind of market we're in different product categories and areas. So let's jump right into the stats and see what's happening in Metro Vancouver. Now, there's some optimism at the board and in general with the market for the second half of the year. But of course, the mortgage stress test and other factors that I'm going to deep dive into today lead me to believe that we're going to be in a softening market for the greater part of the year. We're currently, though, at a 30% sales ratio for Metro Vancouver, which means we're still in a seller's market, which means the market is still very healthy overall. Let's look at the different categories. So if we look at year over year, the number of listings, of course, are up now, and the total sales are up from last year, year over year. There were 1,300 last year, 2,000 this year, and we're looking at the sale price year over year variance up by 12%. Overall, all product categories, Metro Vancouver. This is the table that really sort of outlines it in a nutshell that I put together. Let's look at detached housing band first. And if we look at the sales activity year over year, we are up in activity from this time last year, 46%. If we look at the benchmark price year over year for detached houses in Metro Vancouver, we are up 22%. And the benchmark price since last month for houses, no change. Interesting. Attached townhomes and duplexes, year-over-year activity up 54%. The benchmark price year-over-year up 17%. Change from last month, 0.1%. Virtually no change. You can sort of see what's been happening. We look at attached apartment condos, the increased activity since last year, 61%. Prices are up a healthy 9%. Change from last month, 1.2%, and that's interesting because the less expensive product is still holding out in terms of being in an active, hotter market, and that's going to be the last product that will be affected, and that's primarily in the outskirts, the suburbs of Vancouver, and you'll see that a little bit later in my presentation. We're still getting incredible results with our sellers, a couple of photos of our sellers over the last little while. And there are four drivers that are the fundamental drivers in our market. The first one is that money has been cheap all of last year. And the interest rates were, boy, we'd get a 5-year below 2%. But now the rates are starting to increase. The stress test has impacted the buyability or the buyer's ability to purchase property by about 4.5%, and the fixed rates now are between 2 and 2.3%. So we're seeing that climb in interest rates, and the climb in interest rates is tied to inflation, and that's again tied to the economy. They're all part and parcel. As things start to recover, you will see that change. So the money being cheap, yes, historically 2 to 2.3% for a 5-year mortgage is incredible. Those are great rates. We are going to see some projections into the future and how that's going to change. Second factor, savings. People still have a lot of savings pent up from last year from not traveling, eating out, etc. So the savings are definitely up. Over last year, Canadians have saved $100 billion. So that money has been spent on many things, including real estate. Demand for more space, that is still continuing. People want more space. They're working from home. They're playing at home. They want that private outdoor space. That factor is probably going to continue well into the rest of the year and probably next year, and that's for every age group and every product category. Supply is still low. Well, that's changing too. Supply levels are increasing in all product categories and pretty well all areas. There is one exception. We'll talk about that a little bit as we do that dive into the various neighborhoods. So these four drivers, there's other drivers of course, but these are the main factors that I think have driven our market over the last 18 months during the pandemic. And you can see a couple of the drivers are weakening and being depleted, and that's causing that transition in our market now into a changing market. Okay, so if we just pop back to that last slide, let me just finish that last line. So the summary is prices have stabilized. There's little to no upward pressure left in that market. We've hit that peak, as we know, in April, and we're in a gradually softening market. We'll of course cover that. We're still getting some pretty incredible results out there now, but you're having to really market aggressively. We're doing our live stream broadcasts from our listings. This particular one got 9,500 views. I mean, there are people out there loving the virtual platform, and that kind of marketing we're seeing is getting great results. We're getting record views, we're getting amazing turnouts for private viewings, multiple offers, above market sales. A couple of the ones we did recently, we got 15 offers, 300,000 above list selling prices. So there's still great results, but we have to really work hard to get them. Okay, let's look at what product is hot and what's not. So let's dive right into that. Again, remember the sales ratios, over 21%. We're in a seller's market, 12 to 20% balance, not favoring the buyers or the sellers, under 11% buyers market favoring the buyers. Okay, detached houses, Vancouver West Side, 15%. Smack dab in the middle of a balanced market. Okay, now remember we hit our peak back in April, 28%. Look at the gradual decline in our sales ratio for houses on the west side. Very interesting. We're seeing it out there in the market. That activity is starting to drop. Unless you're doing an exceptional job in marketing and getting lots of people out, you're not going to be getting the results that you would have seen back in April. Okay? Condos and townhouses, Vancouver West Side, still a very healthy 34% for attached strata product in the west side of Vancouver. But again, look at where it was. Last month was 39, so we've had a slight drop. May was 40. April, our peak month, was 46%. So you can see quite a drop since April in terms of sales ratio. But again, still in a seller's market, still some upward pressure on pricing, even though, remember, we only saw 0.1% increase in the pricing. So that's interesting. Let's pop now into the downtown area for condos and townhomes, 20%. Right on that border between a balanced market and a seller's market. And you can see that's a big drop from last month at 29%, 31 in May, and our peak in April, again, all the products peaked in April, of 51%. So we're just leaving that seller's market now for downtown. If we look at detached houses on the east side, we're at 24%. So we're still in a seller's market, some great sales ratios for various neighborhoods and price bands. Remember, each of these products can be broken down into different price bands, and some of the bands are still in a seller's market, and usually it's the lower entry-level price bands for each product where it's hotter, okay? But again, last month we were at 28, May we were at 35, and April, our peak month, was 53%. So that's interesting. Still detached houses on the east side, seller's market. You'll start to see that transition very shortly. Condos and townhomes in the east side, wow, 54%. Now, this, interestingly enough, is the only product and area that increased from last month. Everything else has dropped. Vancouver east side condos and townhomes are actually up from 49%. Why is that? Well, it's very simple. It's the old supply and demand curve from Economics 100. This product actually dropped in supply last month. So as supply drops, even if demand remains constant, the prices should increase. So that's what happened on the east side of Vancouver. We had a slight drop in supply. As soon as that supply catches up and recovers in the east side, you will see the sales ratio to continue to soften. Okay, so what's happening in the burbs, in our little outlying areas? We've got detached month-to-month variance from last month. Most of the greater Vancouver area sales ratios have dropped. The only exceptions are Richmond slightly up, Ladner slightly up, North Vancouver, interestingly enough, slightly up, Port Moody, Port Coquitlam, and Pitt Meadows, again, more on the entry-level product, and the lower priced product is typically selling hotter, but the upper end is starting to push its way down through those areas, and you'll see these red circles start to disappear as the softening continues. If we look at attached monthly variance from last month, everything is down apart from east side of Vancouver, which we just talked about. Coquitlam has a slight increase in sales ratio, and so does Maple Ridge. So in general, we're seeing the trend in Greater Vancouver following, but those outlying suburbs where homes and product are more affordable are still having some hot pockets. So that's interesting to note. So what next? What's coming? Well, interestingly enough, good news on the COVID-19 front. We've got, over the last 90-day period, there's the number of cases being reported. We went from a peak this spring of 9,500 cases per day down now to about 500. So things are looking really good. Hospitalization rates, boy, we went from a peak of 4,500 hospitalization, total people in hospital, and now we are only 757. So really nice curves from the COVID front. Why am I covering COVID-19? Well, COVID-19 has impacted everyone, and it's also impacting consumer confidence. So the better news we have there, the more activity we typically get in the market. So that's all good. Canada's doing an amazing job in vaccinating our citizens. Look at where we are now. 36.2% of all Canadians now have had their 2 vaccinations. That's great news. You can see the curve just shooting right up there. I've just had my second vaccination a couple weeks ago. My wife I took in yesterday. She's had her vaccine. And everybody I talk to seems to be getting, apart from the younger crowds, they're going to be called in very soon. So that's all good news. People are very excited about all the good news on the COVID front. And again, that is stimulating our market somewhat as well, but those other factors that are softening are a little bit more overwhelming, and that's why our market is overall softening, okay? Important to note, 90% or else. Anyone you know that's not getting vaccinated, tell them to go in. According to the infectious disease modeling specialist from SFU, interesting fact, if we don't hit 90% of all Canadians getting double vaccinated, we could very well see another 4th wave starting in September, peaking in November of this year. Nobody wants that. So please, go get vaccinated. There's my plug. Now, let's talk about other factors. The economy obviously is booming. Here's when COVID hit. It's been doing nothing but going up since our economy has started to recover since last year. slight activity peaking that happened in April and a little bit of a drop in May, but overall doing very well. Now we're talking about mortgage rates as being one of the main factors, and as inflation increases, the mortgage rates are also going to increase. Now here's an interesting fact. Here's where we are right now. If we're looking at our baseline, we're looking at inflation going up. That's going to pull up our lending rates. And the forecast I recently read is that our 5-year rate now, which is between 2 and 2.3, could very well, hit 4% by 2024. Now, that doesn't sound like a big jump, but if you look at the fact that the predominant vast majority of our monthly mortgage payments are interest portion of the payment, very small goes to principal, our mortgage payments could technically double by 2024. And we're halfway through to 2022. So those mortgage rates increasing are going to impact our market definitely. So I see a really, really good window for purchasers to take advantage of the low rates now as our market softens into summer. There's going to be some cheap money still available then. And we're going to see some increasing through 2022 and 2023, which will make it more difficult for entry-level buyers and upgrade buyers to purchase, of course. Okay? Now, again, I saw this article in The Sun. Housing market will be first casualty of higher interest rates, and it's all true. When the rates go up, the affordability disappears very, very quickly. So our market is very well tied into that one of the 4 factors I mentioned earlier of the interest rates. That's important. The other one is supply. I just pulled out Vancouver West Side houses and condo townhomes. You can see the West Side supply has been increasing quite dramatically since December. You've seen an increase in inventory, and also for attached condo townhomes. Since December of last year, we've seen an increase, slight mild drop over the last month, but again, you'll see that continue. So supply is going up, interest rates are going up, the pent-up savings is starting to deplete. Those are the main reasons we're seeing that softening and peaking that happened in April. All our sales ratios are on their way back down to a balanced market, and you can see the sales activity overall in BC peaked in April and has started to decline in terms of number of units sold. So by region, we're seeing the same thing. Northern BC, Kootenays, Thompson, Okanagan, Vancouver Island, all of them peaked, interestingly enough, at the same time in April, and all of the sales volume has started to drop into where we are now in early July. And again, I always like to show this graph. It's one of my favorites. Since the beginning of time in real estate, where we tracked it at least 1977, you can see the blue curve being the detached, quite a turbulent 2015. We all remember that. Foreign home buyers tax, empty homes tax, tax. And then COVID-19, we see that drop. But look at what happened after that. There's April, there's a little notch there and a little bit of a return there. So here's the billion or trillion dollar question, what's coming? Well, in the beginning of the year, I forecasted, quite accurately I might say, that we would have a 15% run up in our market. Well, if you tabulate everything to date, we hit 14%, I was 1% off, not bad at all. I'm still predicting we're going to see some softening up to 20, 35% in our market. There's going to be various factors, obviously, that will affect the timing and extent of this correction. One of them being the vaccine rollout. Now, we're doing very well there, so that's good news. That's an up. The unknown is government tax changes. Canadian government spent over $1 trillion so far subsidizing individuals, businesses, lease payments. All sorts of money has been spent, and rightly so, over the pandemic. That money's got to come back to the government. So there is some anticipation of some tax changes, and also the government stimulation package. how much more is going to be spent stimulating our economy if that's needed, and when will the current programs end? Those are all factors that will determine the extent and the timing of the correction. And one of the newest discussions that's come up is the Hong Kong buyers. You're reading it on the media and the news, you're seeing it. There is some anticipation of more money coming into the province and the country from Hong Kong. People relocating into Canada. Canada is one of the favorite destinations for a lot of Hong Kong residents. And interesting fact that I found is FinTrack actually tracked $43.6 billion in electronic transfers to Canada from Hong Kong over last year. That's a lot of money, 43.6. And that doesn't include cryptocurrencies or transfers under 10,000. Those are the only ones they're tracking is over 10,000. So again, that's an unknown factor. How much money will come in? How much of that money will be spent on real estate? And what kind of real estate? Are we looking at principal residences, maybe higher end luxury homes? Is it going to be some investment? How much of that is going to come in? How much will that impact the overriding other factors that are changing right now and the tax changes, etc.? So these are all unknowns, but these are all variables that will determine where our market's going to go. So my favorite visual that I've put together in the beginning of the year, of course, and now still, we got pent-up buyer demand, the savings that took place, the vaccine program in full swing, the interest rates were low but changing, the economy's booming, we got that peak activity period, prices have increased actually by 14%, I predicted 15%, and what's happening in the transition point, which I happen to choose as July, I was bang on there. Mortgage rates began to rise once a solid economic recovery is underway. As you know, mortgage rates are tied to inflation and the economy. So as the economy is booming and inflation starts to increase, our mortgage rates will go up. Inventory levels are increasing. Well, I just showed you the graphs. We see that they are increasing. Pretty well all product categories. There's a couple of outliers that haven't yet, but will as shortly. Federal election, when's that coming? Wow. And what's going to happen after the next majority government is formed? There's been a lot of promises taking place now, but we really don't know until that actually happens. Will the government introduce new tax measures? And if so, how aggressive will they be? The government pandemic assistance programs, as I mentioned earlier, will eventually end. That will make a change in our market. And the sellers will begin to list in much higher volumes, and that will spike our inventory. Some of the buyers may hold off and wait as the prices start to soften, and that will, of course, be our correction period. And we'll have rising inflation, we'll have rising interest rates, and of course, potentially rising taxes. Now, counteracting that, the new factor that we're all talking about is the Hong Kong Asian buyers relocating to Vancouver. Again, an unknown. How much will that impact our market? How much will be spent on real estate? What kind of real estate? And when? Doesn't matter where you're from, everyone wants to get the best value in real estate, but certainly that's the one positive thing we see coming in the near future. So that pretty well ends my presentation of my July 2021 market update. If you do have any questions, I would be more than happy to answer them. Feel free to pop me an email, Marty at pospashillrealty.com. I'm Marty Pospashil, as I mentioned earlier. And if you enjoyed my update, I do them every month, this deep dive, and I also do some slight timely updates of our sales every so often. If you subscribe on YouTube to Pospashil Realty Group or like us on Facebook, then you'll get the notifications of my updates. And again, I'm more than happy to answer any questions. I wanted to thank you for joining me today. Stay safe, get vaccinated, and enjoy the beautiful summer that we are having. Thanks for joining me, Vancouver.